Hi, this is Antoine Harris with Platinum Bridge Wealth Strategies. DeepSeek, an upstart artificial intelligence company out of China, upended the darlings of the US tech world like Meta, Alphabet, NVIDIA, Microsoft, Amazon. Is this an existential threat to the tech industry in the United States? This has been all over the news recently. It's caused some volatility in the stock market. Should you be concerned? And what is the outlook for the artificial intelligence industry going forward? So, first thing you should be aware of, DeepSeek has proven that you may be able to produce artificial intelligence output similar to what we've seen with the likes of ChatGPT and what's come from these major US tech companies at a fraction of the cost. It's been proven and it's open source, meaning that anyone can use their technology for free. So it's not proprietary, it's not guarded, it's not on lockdown. Developers that are able to take their basic technology and customize it for their own needs. So this is a significant breakthrough. It's real and it could certainly have an impact. The most important thing to think through is that this is mainly a proof of concept. So even if DeepSeek isn't the actual company that starts to propose an actual threat to some of these large players, as I mentioned before, the fact that open source technology has been proven to be effective and it's been proven that we're able to do this at a lower cost may have an impact and it may start to manifest from some other companies in this space. You have exposure here, most likely, even if you don't own the individual stocks that I mentioned before, like NVIDIA, Microsoft, et cetera, because the S&P 500 is a market cap weighted index, meaning that the largest companies, the companies with the biggest stock prices, make up the largest share of that index. So there's 500 companies on the S&P. The top 10 companies make up over 38% of the index, which is unprecedented. This is the largest concentration that we've ever seen. So the entire US market has been driven by the hopes and dreams for these artificial intelligence darlings of the US stock market. So anything that threatens those companies could be a threat to the market overall. So that's why it's important for you. But the thing to remember, this is coming from China. DeepSeek was the number one downloaded app on Apple recently. But when you look through the terms and conditions, they have access to all of your data. So all of your keystrokes, your passwords, anything you put in a chat, anything that you type through DeepSeek is going into the reservoirs for China to analyze those data, and it poses a security risk. So the fact that this is coming from China is a big deal for the United States government and for these private companies in the US. So I don't see the major consumers of some of these large infrastructure chips that are coming from NVIDIA, the major consumers like Microsoft, Facebook, Google, shifting their purchases from NVIDIA, an established company, to an upstart from China for security reasons. These major companies are trying to build out a solution that mainly serve large businesses, enterprises, and security is going to be a key component of that. I don't think DeepSeek is going to undermine the entire industry. What may happen is a shift toward different parts of the evolution of artificial intelligence, meaning that the first iteration for artificial intelligence has been a major focus on building out infrastructure. It's been very hardware dependent, hardware focused, and that's benefited a company like NVIDIA, which sells the chips that power artificial intelligence. The next phase may be more software based, whereas artificial intelligence starts to become more commoditized and the price to deliver artificial intelligence solutions goes down, the usage of these solutions may increase, which means that the software that's able to process and facilitate these data in the flow of artificial intelligence communications may start to emerge as leaders in this space. So that's something to watch. The arms race for preeminence in this space between the United States and China has been well documented and is very important for both countries to be the leader in artificial intelligence. Up until this point, the United States has had a lead on the technological side, but China, because of their population, has had the lead as far as being able to provide data to be analyzed within these systems. So anything that threatens the United States lead could bring in more investment, more urgency, more support from the government, from a regulatory perspective, from an investment perspective, to really start to push out and continue to move toward the forefront of this space going forward, because it is so important for our country to be the leader in artificial intelligence. The government may get more involved. You may start to see more restrictions on the exportation of chips from the United States to China. You may start to see increased tariffs in this area. You may start to see the government try to start to manage and manipulate certain things so that we are more protected, so that we're able to continue our lead in this space. Now, what you should be aware of is, one, you may start to see a shift in leadership within the artificial intelligence space. It may present a buying opportunity because there may be even more investment going into this space to provide secure, customized artificial intelligence solutions for enterprise entities. Two, this may represent a buying opportunity because this may cause an increased investment for private companies and governments as we try to ensure that we are able to lead the next generation, the next evolution of artificial intelligence solutions for service around the world. Three, monitor how the big players in this space talk about future investment as far as the build out of their infrastructure for artificial intelligence. In the short term, none of these large players have talked about changing their capital investment for building out the infrastructure. So Meta, Google, Apple, Amazon, et cetera, still plan to spend billions of dollars on their artificial intelligence initiatives. What you want to see is what happens in the ensuing quarters next year, what they're projecting to spend in the future. If that starts to come down, then you may start to see a shift in how this money is allocated. At the end of the day, lower cost artificial intelligence solutions will be good for all of us because it's going to push the technology forward. It's going to force a lot of these players to adjust how they navigate this market. New leaders may emerge. It could have an impact short term with volatility that you see in the market. So there's no need to panic, but you want to be aware that you may have exposure through some of the index funds that you have because of the large concentration in tech companies. That is why, despite the fact that diversification has not necessarily worked the last couple of years because the market's been propelled by the tech companies within the index, diversification will continue to be important at the sector level, globally, and within asset classes, meaning that you want to have stocks and bonds, you want to have bonds in place to provide some support if we continue to see short-term volatility here. The most important thing going forward is that you want to be diversified. We may see some continued short-term volatility as all of this plays out. Artificial intelligence will continue to be a major catalyst for economic growth in the United States and around the world. You want to have exposure, but you also want to make sure that you're protected on the downside. If you have any questions at all, please reach out to me. This is Antoine Harris with Platinum Bridge Wealth Strategies, and I'll talk to you soon.